The world faces peak gold according to Goldman Sachs, but one geologist who's discovered more than 30 million ounces of gold says he knows where to find America's hidden gold deposits. Featured on the History Channel's How the Earth Was Made, this expert gold finder could be on the verge of a massive gold strike. Even $1 billion gold giant has engaged this small market cap company to use their proprietary technology. For the thrill of gold discovery with a new edge in Nevada, visit futuremoneytrends.com/gold.
Hello, everyone, and welcome into CrushTheStreet.com. My name is Kenneth Amaduri, and I'm joined today by a special guest. We're fortunate today because we get to pick this man's brain. He's David Morgan of The Morgan Report, and you can find him at silver-investor.com. He's an expert when it comes to silver, gold, other precious metals, and specifically investing in the resource companies. So, David, thanks so much for coming on the show with me today.
My pleasure. Thank you.
David, it really feels like we're starting to pick up some traction here in the precious metals market. Precious metals have taken off somewhat in the last couple months. We've stagnated somewhat, and maybe we'll get your thoughts on that. Mining stocks have taken off even more in that amount of time, and we're kind of seeing them start to do their own thing, maybe because they bottomed out so much. So I'm just curious to get your comments on what you see happening right now and going into the new year.
Well, right now what we've seen is silver and gold have both traded over their 200-day moving averages. Silver was the first to do it, and gold also has done it recently. They both have backed off as we're doing your interview. So my take on it right now is that the bottom is probably in. There's certainly a slight chance that there'll be a new lower low, but I doubt it. I said a few months ago that I felt that October would be the month where there be a sentiment shift that's very, very beginning, that it's just starting, which means that we would see the metals actually doing well or relatively well, and the equities market starting to falter. And we're right at that juncture right now. So let me explain. We're looking at the 200-day moving average for gold and silver. And I look at it like Dow theory, and many of us do, that I would like to see gold and silver both confirm each other, going over the 200-day moving average and staying there. Right now they've backed off. And at the same time, you see like the major indexes like the DJR or the SPX are actually running up against theirs and backing off somewhat, which means that, and it's not all about technical analysis. I don't want to make it that so, but what I want to state is that if you see a shift here where the metals, rocket up through and continue upward, and the equity market goes the opposite direction, then that's confirmation to me that we're well on our way. I don't see that. I see a test here, and I see the metals falling off somewhat, faltering a bit, backing and filling, making another run at the 200-day moving average, getting above it, maybe faltering again, coming back off it, and going through maybe the third time. As you know, Kenneth, I've been in these markets for a long time, and I have certain observations I've made over the years. Normally, especially on a turnaround, meaning 4 years in the doldrums for the metals and the mining equities, you usually don't get through a very significant marker like a 200-day moving average without some trial and error. In other words, going through it, coming back, going through it, coming back, and going through a third or fourth time. Normally it's about 3. That's what I think we're going to see. But I want to state for the record that I do believe what I said about October is correct, meaning that the shift is taking place for those that really have eyes to see, because most people aren't going to see it in foresight. They're going to see it in hindsight. They're going to say, oh yeah, in October 2015, actually that's when the equities started weakening and the metals started showing strength. So that's the way I see it longer term. And we'll just have to wait and see if I'm right or I'm not.
David, could we see mining stocks take off without a rising metals price, just in the same way that mining stocks peaked in 2010, 2011, just prior to precious metals peaking? Could we see mining stocks take off prior to a rising precious metals price?
Well, normally in a bull market, they do lead. and that's what we've seen, as you just described previously. And I think we could. I mean, if you look at an individual company, always there's that rare event or new technology or discovery or, some big change, either an acquisition. I mean, there's so many variables out there that certainly on a case-by-case basis you could see that. On the group as a whole, I would say, if I'm understanding your question, is yes, I expect to see the equities lead the metals up. So let's just say, for example, that this backing and filling at the 200-day moving average is the marker. The metals start falling off like they have as we're doing this interview, somewhat, not significantly. And the index continues to go upward. That wouldn't surprise me. But as far as to see a real dissonance where one is going up, the other's down, no, I don't see that. They usually follow each other. But as far as restating the case, yes, you will see the equities lead the metals, and we have seen that already. And as you said in the in the preface to the interview, the mine equities actually have done percentage-wise better than the metals in some cases, or by some of the indexes, which again is confirmation that this October is like the turning point. I think it's certainly been long enough. I know that myself, our members, our readers, our peer group, our colleagues, our associates, everybody that we deal with pretty much has had a rough road, and we're tired. We're like ready for this shift to take place, and I really do think it is.
I want to talk about investment philosophy in a moment, and I want to kind of touch on that. But before we get there, I want to talk about this perfect storm of events and just kind of see what you think about it. We got potentially peaking production, supply shortages, and the global monetary disaster kind of all converging at once for the benefit of precious metals. Are you leaning towards any one of these reasons in particular for why precious metals are poised to thrive, or all of them?
Well, I'd say all of them, but to make the case fundamentally, which I have for years, doesn't necessarily change a market's direction. I mean, I've been, done several interviews for the last, 15, 16 years, whatever it's been. And one of the statements I made a long time ago is you couldn't change the major trend of a market, but within the trend you can certainly manipulate it, from time to time, or often or less often. And I still adhere to that. I think the major uptrend in gold is still intact. Silver, I think, is still intact, but barely. Certainly the metals have been hammered. But that whole time that we've been in this bear market within a secular bull market, we have seen the fundamentals actually, from my perspective anyway, get better and better and better and better, and yet the metals continue to falter and fall and back and maybe get a little bit of a lift and then fall off again. So fundamentally, the reasons for owning gold and silver are several. And there's arguments within the community. I mean, there's people that say, well, it's an inflation hedge. I mean, if you study Roy Jastrom's work, gold particularly is a deflation hedge. Silver's more mixed. There's people that call it, a hedge against currency debasement, which I adhere to that. But regardless, I think, Doug Casey probably sums it up the best, and it's a crisis hedge or an uncertainty hedge. Mm-hmm. Inflation, deflation, governments, whatever, but it's something that is a confidence guarantee. So all of the paper money systems are based on confidence. It's a con game. And when that confidence is lost, that's when you run into problems. And confidence isn't necessarily lost, one Tuesday afternoon at 3 p.m., although it could happen. Normally it's lost over time, where you see what we've been witnessing for the last several years, where China moves aside the dollar for a lot of their trade. They will make trade deals that circumvents the dollar. They'll go direct to other countries with their currencies and swap those back and forth for trade deals. You'll see them exiting the dollar for, let's say, settlement for oil, as an example, and all kinds of things. So you've already witnessed that time and time again. You see the rise of the BRICS nations, for their own purposes to basically, again, move further from the Anglo-American empire's hold on the financial systems and the banking empires. So all these things show fundamentally that the fiat system at large is being questioned more and more and more. No one wants it to end. I don't want it to end. It doesn't serve anybody to see it end, but it will. It's mathematically impossible for this thing to continue indefinitely, but it can go probably further than we might expect. And you can see, more and more evidence of that all the time. I mean, it used to be that you could borrow, $1 and get $1's GDP growth by, doing that. Now I don't know what the number is. $5, $10 you got to borrow to get like $1 growth. I mean, it's a losing proposition. I want to go ahead and make an analogy from my background in flying, and the pilots out there will catch on to this. Hopefully, if I do a good enough job, the people that don't fly will get it. But it's called behind the power curve. And when you're behind the power curve in an airplane, prop or otherwise, what happens is you get the nose too high and the airplane stalls out. And you might have a lot of power left in the engine. You might be at 60, 70% power. So you've got like a bunch of throttle left. And you can ram it home as much as you want, give it everything you've got, but it doesn't matter. Because all that you've got isn't enough to come over the forces of nature, because you are behind the power curve. No amount of power is going to save your fanny, and you are going to stall the airplane, and that's all there is to it. That's an analogy for where we are now. It doesn't matter how much money they pump, how much money they print, how many swap deals or derivatives they come up with, what interest rates they move around. It doesn't matter. They're behind the power curve. No matter what they do, the laws of nature are taking hold.
Well, it was a clear analogy, David, and I'll let you just finish the analogy. Does the plane crash at that moment, like the economy, or does can the plane?
Does the plane crash or not? And the answer is both. If you're really close to the ground, you'll crash. There's not enough airspace to recover the airplane. If you get behind the power curve and you have enough altitude, then once it stalls, nature takes over and the airplane's nose will pop down. You'll start gaining speed, and if you gain enough speed, you can get on the correct side of the power curve, and you can prevent yourself from having, from crashing.
You can fix it.
So it's a variable, and I think that applies here as well. I mean, we could probably admit something's wrong here sooner or later, or the markets themselves, and if we have enough altitude as a metaphor, we might be able to recover. You might be able to say, hey, look, we're going to reflate by putting gold at, pick a number, $10,000 an ounce. All these banks own gold. They now have the ability to basically write off a bunch of this black hole debt and move forward. That's an example of what could happen. But then there's the possibility, using the same analogy, that we're too close to the ground, and once this thing stalls out, there is no recovery.
Well, I think that was clear. David, I want to talk about investment philosophy with you, and you kind of alluded to it with the last 4 years being pretty devastating for those of us in the precious metals sector. And just looking in general at historical charts, let's say you looked at the Dow Jones and the 1929 depression. Sometimes it gets very easy to be like, oh, that's the bottom. I would have totally have done that. Got in there and ride that thing up. Or in 2008, buy stocks, at the bottom of 2009. And, you look at the charts and it seems so easy to do. But right now, we could potentially be in something when we look back from 2020 or 2025 at a really historic bottom for precious metals and, junior mining related securities, stocks. And we could be kicking ourselves really, really hard at not investing at these prices. Obviously, it's much more challenging when a stock goes, let's say, from $5 to $2, and you're like, oh, it's already down, whatever that is, 60%, and now it's time to buy, but then it goes from $2 to $1. Now you're down 50% on your investment, but if you would have held, it could now go to $4 again, and you're up 50% from your $2 buy, but you would have been down 50% first before you realized that 100% return. So anyways, I'm kind of saying a lot. I just want to talk about this, overcoming the emotions and the potential of what the opportunity in 2015 can be for people who get in now.
Well, I like math and always have. I mean, if you look at where we are on a bell curve, we're at the, what's called the fat tail. We're at a point where, and the fancy word is sigma, I'm not trying to impress anybody, but we're several orders of magnitude away from where we normally are in a normalized situation, which means these things are screaming buys. The potential is huge, and I think it always behooves everyone to buy quality, no matter what. I mean, the junior sector had a time and place for it, and that was at the beginning of the bull market. There were a lot of equities there that went up 10 or 20 fold that really had no reason to do it, other than that it was the beginning of the market cycle, and there was a lot of enthusiasm and a lot of people were playing the game. This time around, most of those are long gone, and there are very worthwhile companies, but to buy the juniors, it's just okay. I mean, there's certainly selective juniors. We certainly have a few in our, we rank it with the top tier, the mid tier, and the speculative situations. And we, hand pick them all. And do we get it right 100% of the time? No, no one does in investing. But quality is the number one thing. Value, you want quality. Yet, to go further, and let's just, as a thought experiment, say that we're both right, this is an opportunity of a lifetime, especially on the equity side of the mining sector or resource sector. And let's say that we have a 5-year bull run. Let's say this is the third leg, which I expect it to be. The third leg usually the biggest, then most money is made, and it's the leg that everybody remembers. In the stock market, it's like it can't go any higher, and it just keeps going higher. And it's like, I got to get out, but it goes higher, and it just does that. So in that situation, the juniors will not only do well, they will probably exceed percentage-wise what the top tier and the mid tiers do. And what will happen, again, remember, we're doing a thought experiment here, that there'll be a lot of what I call junk that'll pour into the market near the top. In fact, that's a good cue for people to wake up and smell the coffee that we're getting near the end. So what will happen is you'll have a lot of XYZ mining stocks that have nothing to do with mining. All they have to do with, they've got gold and silver in their name and they're heavily promoted. And they'll be cheap. And you'll see those things being thrown into the market because this is what happens at tops. Same thing happened in the tech wreck. I mean, I don't know your age, and I know you're much younger than I, but you had dogsandcats.com. They had no business plan. They had nothing but eyeballs, and were selling at these ridiculous valuations. This is what happens in all sectors. It's not just the mining sector. Fortunately or not, in the mining sector, there's some magic about gold and silver, particularly gold, and it's called gold fever for a reason. Especially if it's fear-driven at some point in this next run, which means we will see a lot of people come into the sector that never even thought of coming into it, but they're fearful that the U.S. dollar is going to become absolutely worthless, or they're fearful that there's going to be another bail-in, or whatever. So I don't want to belabor it too much, but I really think that this next bull move is going to be one for the record books. And yes, there will be a time to get into, let's say, more speculative situations, but that will come after the bull market is well established, and you got to be very careful. You got to know what you're doing. But always buy quality. That is the thing you want to do. And you need to diversify within the sector. There's nothing more frustrating than saying, oil's going up and buying, an oil stock when oil's at, $50 or less per barrel. And you only own one, and all your friends own them, but owns different stocks, and everybody's making money and they're bragging about it and having a good old time, and your stock sits there and does nothing. So that's why you diversify, and especially through the sector. But I probably, again, belabored it. But it's important to me because, my story is that I was young and, I was working a lot of overtime, and I had the cash, and I wasn't buying the new car, and I wasn't buying the stuff. I was investing. And I overloaded in the junior sector near the top, like I just described, only to basically have a bunch of losses. And I realized, and I paid a very heavy price money-wise to learn that lesson. So when I started years and years ago with my publication, I didn't want that to happen to anybody that followed my work. So I'm very careful about that, because there is a time and a place for it, but you got to do it. You must do it in a manner that is in line with what your goals and risks are. And so I've always taught, bet a little to win a lot. These are the situations where if you get a 10-bagger, and it changes. You have somebody such as myself or others, I'm certainly, there's lots of competition in this business, and I'm glad that there is. But for example, Western Silver, we started out as Western Copper. And I happen to know the principals of the company, and I followed very closely, and then changed the name to Western Silver. And so we actually had that as a rank speculation in the beginning, but as something that we provide that meets, let's say, some other services may or may not. But we're willing to take a very let's say studied and contemplative view and real world analysis to help those types of situations. I mean, that company is bought by Glamis and then bought by Goldcorp. And anyone that grabbed that thing when we had it as Western Copper is still happy. I mean, as bad as this market's been, I can tell you when I made that trade at $19 silver and got out 48, there's a few people on the web, and I won't mention them because I will keep their anonymity. But these guys are retired because of that one trade, and they're pretty happy with me. So It goes both ways. I try not to let myself get very high or too low when things are low, but to be consistent. It's been low for long enough. I'm ready to see this thing turn around.
That's a good point. Well, everyone, that's David Morgan. He's with The Morgan Report. David, if you want to just kind of give everyone an idea of what they would receive and what you're offering. I mean, you kind of alluded to some of it, but just in a wrapping up sort of way, where they can go and what they'll find if they visit your work.
You bet. Well, the easiest thing to do is just get on the website and scroll down to the very bottom and get on our free email list. As that will give you a pretty good idea of the situation. Anyone that signs up for the regular report has a 30-day free trial. So we have three basic levels. We have the basic, that is just the electronic publication once a month. We have the premium service, and this goes again back to my story. I thought, man, wouldn't it really be really cool if I could go on these mining tours, but they're not going to invite me. I'm just very, very interested in these things. You have to be an analyst. You got to be a newsletter writer. You got to be somebody to get invited on these tours. Well, we know that. But having, experienced it from the other side, we take a camera and we basically take the people with us. So people that want to see, XYZ mining that we might, do a write-up on actually gets a video on our premium service of us seeing the property, seeing the project, seeing the core shack, whatever. Basically, they get to go with us just by, a video. And then the other thing that really intrigued me about this business was, this guy's a great, I really respect so-and-so newsletter writer or whatever, but, I've got a question, and it's a shot in the dark, you write it in, you get an answer, or you don't. Well, for our premium members, we guarantee that we will give them an answer. So that was another thing that I thought, man, if I was on the other side and I was, going to invest in a newsletter, what would I want? Well, I'd want to know. If I wrote in a question, I would get an answer to it. So we do that because I try to provide as much as possible for our members. I'm very much beholden to them. I know, who they are, why they're there, and what I can do for them. I'm trying to do it in the best manner possible, which is what their needs are, what their wishes are, what their wants are, and what they would like to have. I'd like to go on a mining tour, we'll do it. I'd like to be able to ask you a question and get guaranteed an answer, we'll do that. And we do take input from our readers. And that's it. I guess I overdid it, but I want to explain that because we do things a little differently. I mean, it's still extremely small. It's a niche within a niche. But I just want to be able to, leave the industry when that day happens and look back and say, I kept improving. I kept doing my best. I kept giving my best. And I kept striving to do what I think is the most important thing. Look at it from an investor's perspective, not my own personal perspective.
Well, there you have it, everyone. That's David Morgan. David, thank you so much for taking the time. I know it was kind of a last-minute interview here, and you came right on, and I really appreciate you doing that. Let's do this again down the line.
Thank you, Kenneth. I enjoyed it.